Have you had to alter your thinking now that regarding your future, now that HSBC isn't going to be part of that?
Not at all. We've continued to run the bank throughout this process on a business as usual basis. I think what we said at the time that the HSBC proposal was announced is that it was only a proposal and there was no certainty that it would result in a transaction. And clearly, from a strategic perspective, we felt HSBC could accelerate the delivery of our strategy. It's now business as usual.
Okay, Mike, well, just looking, going forward, at the end of the day, you're talking about what we have been reading is you're talking about a clear path forward and just really focusing on your core businesses right now. One of the things that the media was talking about with the HSBC saga that was playing out is that perhaps they found some nasties when it came to your retail division. Yeah. How do you respond to that?
So we certainly don't think that that is the case. You'd have seen from the announcement that Old Mutual released is that they believe that the HSBC's decision was not due to any items found on the due diligence. And you've got to believe Old Mutual would have been in those discussions. And certainly if you look at what we put out in our trading statement, it's obvious to see that our bad debt ratios are in fact improving since June. And we also added that we've actually had a deep dive done on our home loans portfolio by an external risk management consultancy who found our provisioning to be fine.
We can get to the numbers in just a moment. Maybe staying with Old Mutual though, because it's now indicated that Nedbank is not part of its future strategy. Now, where does that leave you with a controlling shareholder who's not focused on you?
Yeah. So certainly I think what Old Mutual is saying in the last couple of days is they're certainly going to stand back and review post the events of last week. So I think it's probably early days to say what Old Mutual's longer term strategy will be now after the disappointment of last week's announcement. From our perspective, though, we've never relied on a controlling shareholder in the way we run or manage the business at all.
They did help you quite a bit a few years back when you had to have that big rights issue, though, didn't they?
Certainly.
They stood behind you for that.
They co-underwrote the rights issue, that's correct.
Looking at Standard Chartered, there's a lot of rumours that Standard Chartered might be interested. We know that they've recently launched a rights issue which basically outstrips the fact that they could be using that money for an acquisition, but there's still a lot of talk in the industry at this point in time.
Yeah, so certainly we wouldn't want to comment on any of that sort of speculation. We've always said from Nedbank that we think a global banking partner would be good for us. But it's very difficult in the current uncertain regulatory environment, I think, for people to contemplate transactions.
Well, of course, Mike, Africa's what HSBC and just about every other bank is clearly focused on at this stage. You have an alliance with EcoBank, and that really gives you, well, the alliance has 1,000 branches in 33 countries, so it is an extensive network. Is that enough for you? Do you think you'd also like to make acquisitions in Africa and grow your own foothold there?
Certainly. We've always said that our Africa strategy consists of a number of pillars. The alliance is certainly one of those. But we continually look at acquisitions or inorganic opportunities in Africa. But those need to meet our own criteria in terms of cultural fit, strategic fit, and financial fit.
Anything out there that you like?
There's nothing on our radar screens at the moment, and we continue to look. This is certainly from our perspective a marathon, not a sprint.
Well, do you think you've missed the curve? And I'm glad you say marathon, not a sprint. But at the end of the day, Africa has a lot of growth potential, and the banks that have been in Africa for a very long time, of course, are starting to reap the rewards. Do you think that perhaps you have missed the curve?
No, we certainly don't think we've missed the curve. And if you look at the data, in fact, most banks in the rest of Africa are still producing lower returns than they are in South Africa.
You mentioned numbers, and of course you expect full year earnings to rise by as much as 8%. You talk about improving bad debts, higher fee income. Are things starting to come right now? Is the consumer getting back on his feet? Are they starting to borrow more money?
Yeah, so certainly what we say is that 2010 is a better year than 2009. So things are starting to come right. I think from our perspective, we'd clearly like them to be coming right faster. So
it seems to be a bit slower than you expected at the beginning of the year.
Yeah, so certainly all the leading indicators are turning in the right direction, but this seems much more a story of the second derivative. It's the speed at which they are now turning.
Well, you mentioned your credit loss ratio, which has improved quite dramatically, 1.46% for the 6 months to June to 1.36% at the end of last month. How much more of an improvement can we expect?
We would certainly expect that it would continue to improve between now and the year end. No unforeseen bad debts taken into account. We have a long-term target range of that ratio of between 60 and 100 basis points. Seems difficult probably in the next year or so, maybe even 2 years to get into that range. But certainly as the economy normalizes, we would expect to get back down below 1%.
Which areas of the business are really still feeling the pressure from the recession of last year and the year before?
You know, generally wholesale South Africa from a bad debt perspective has come through the recession remarkably well.
You're not expecting that to creep through at
so
some
we
other
certainly
stage?
aren't expecting that to creep through. There's very little on our watch lists and radar screens at the moment. There's not a lot of growth from a borrowing perspective, but in terms of the health of the balance sheets, corporate South Africa is in really good shape. From a retail perspective, we have seen all of the bad debt ratios start to get better, but there's still a slow unwind, particularly in the mortgage business, given that it is generally people's largest exposure, and the home loan market is still weak.
Well, you know, Mike, also looking at the likes of Capitec and other lenders in the markets, which of course have taken the industry by storm and creating a lot of competition for you and the other big banks. How do you set yourself up against them, and what is going to be your differentiating factor going forward?
Yeah, so certainly, I mean, generally speaking, Capitec do compete in a segment below where we would focus the vast majority of our business. So even if you look at our personal loans business, our personal loans business would be much more aligned to what you would see in an African bank or perhaps an ABSA, with Capitec competing in the much shorter dated, effectively 30-day loans environment where we choose not to compete.
So you're planning not to get into that target?
No, I think it's unlikely that we would move down into that range at this stage.
Mike, interest rates, there is speculation we could have another 50 basis point cut in the current cycle, and of course that does hurt you with the endowment effects, but ultimately it would be good for the consumer. Do you think we need more interest rate cuts in this economy?
So certainly interest rate cuts are good for us over the longer term. They're tough for us in the shorter term, as you say, from an endowment perspective. I think that interest rates are probably at a reasonable level at the moment. And what the Reserve Bank will do is watch the economic data very carefully over the next few months. We continue to expect rates to be flat during the course of this year, but there is definitely still a risk that there will be another rate cut, we would think, early next year if economic data remains weak.
Also, just taking a look at the overall environment, Mike, you know, we saw 20 to 30% growth for a lot of the banks during the good times. What kind of growth are you expecting going forward?
Yeah, so certainly if you look at what we said in our trading statement, is that over the next 3 years to 2013, we expect to hit all our medium to long-term financial targets, and the target that is specifically related to growth is growth in diluted headline earnings per share of GDP plus inflation plus 5%.